Hey everybody, welcome to Tuesday, January 14th MakerDAO Community Call. My name is David. I do community development at Maker. Geez, wow, it's Tuesday, huh? Feels like Monday, 5 a.m. Yeah, so we do these community calls every week on Tuesday, and we use them as an opportunity to give people kind of a central place to catch up on what's going on in the Maker universe. As you might know, the Maker universe is vast and changes very quickly, and there's always like a ton of interesting stuff going on. So it's really hard for people to like keep up unless they are slightly obsessed, like people like me. So people like me put this all together for you, and hope to share it and go through it and give you guys the ability to access it even outside of the call. So we go over like everything from governance, everything, partnerships, integrations, and grants. Uh, every now and then, the foundation comes out with announcements on our blog, new pages, new hires. Even we used to cover new hires more often, but I think I haven't been doing that lately. We also do like highlights from the community. So Maker is an open source project, and a ton of people are building around it. And so there's always really cool stuff the community is doing, uh, everything from developer creations, articles, notable threads, even videos. And then we get into a little bit about real life events, just what's coming up in the coming week. Uh, and that's pretty much what we go over in the agenda every week. And every once in a while, we get to have like a guest. And this week we do have a guest. And the guest's name is Graeme Barnes, and he works at Gnosis as a product manager for the stuff that they're doing with prediction markets. So for the first half of the call, we're gonna talk to Graeme, do a Q&A. I believe Graeme has a demo lined up for us, if I'm not mistaken. And yeah,
Yep.
let's get into it and see what that has to do with Maker.
Cool. Right, I'm just going to share my screen.
So, Graeme, how long have you been with Gnosis for?
I've been with Gnosis since since May of last year. So yeah, a while now. Enough.
Nice. And have you been working on pretty much like this research and progression into like the prediction market space for you guys since the start, or did you recently or like a few months ago transition into like this specific type of work?
No, it's been pretty much full-time prediction markets at Gnosis.
Nice.
I mean, just a brief introduction about myself. So before working at Gnosis, I worked at status.im. And what I did for them was create the quadratic voting application, which is like basically the amount of S&T you had at the time that the vote was created. It will give you voting credits, and then you would vote on an item, and it would be quadratic in nature. So that was a lot of fun. And then prior to that, I worked at this Chinese chat app called WeChat, and they branched into the South African market. I'm South African, and worked on their mobile wallet in SA, that was the experience that got me into Ethereum. Yeah, and I work in Gnosis primarily on prediction markets. So yeah, prediction markets, I'm sure you've all heard like kind of what they are, have an idea of what they are, but I've just got some examples of some Web 2 prediction markets. So this is probably the most well-known. It's called Predicted, and it's like mainly political predictions. And yeah, they've been right a couple of times, but they've also been spectacularly wrong, particularly on the Donald Trump, Hillary Clinton elections. And then there's the other one, the University of Iowa does a prediction market that's quite well referenced and also been quite accurate in the past with political predictions. But then this is an interesting one, a bit of a blast from the past. You have the Hollywood Stock Exchange, which allowed you to make like predictions on how well a movie would do on like the opening weekend, and you could like predict a movie star's like success in the industry. This was shut down though over, it was essentially like unlicensed securities. And this is another example of prediction markets like in our day to day, which is weather options, where you can basically predict that the weather is going to be like a certain, it's either going to be raining or not. And you can even predict the amount that it rains, so how many millimeters. And then this is somewhat controversial, but I'm going to put it in here. But essentially, financial markets, whether you're predicting the price of, say, Bitcoin, I believe that you can consider that a prediction market of sorts.
I agree. I think futures contracts are in like a weird way a prediction market.
Yeah, at the end of the day, you're doing the same thing, which is you're predicting what the price is going to be and putting a financial stake on that. But yeah, so now over to site. So what is site? Well, initially it's a prediction market, but focused on the blockchain industry. We've been in beta since last year, October. We did like a launch around DevCon, but it's super beta, for lack of a better word. So we basically took a demo that we had, slapped on some design, and then we've subsequently been like adding features to the product, and then rolling out different kinds of markets, which I'll get into in a bit. I won't get too much into the technical aspect of things, but if anyone does have some questions, my colleague Alan Liu is on the call, who is the smart contract engineer behind everything.
Yeah, so if anybody has questions, feel free to put them in the chat. Feel free to even hop on the mic and interrupt. This is meant to be super casual and like conversational, so definitely jump in if you guys are curious about anything.
So at the moment, we've got 2 live markets, and they demonstrate 2 types of markets that we can do currently, and we've got a third one that I'll demo a bit later. So right now, we kind of got a bit of a kick on ETH 2.0 because we're all somewhat, I mean, we're all invested in Ethereum, and Ethereum 2.0, like launching successfully would be massive to our industry. But it's quite difficult to know what's happening. So we're creating a series of prediction markets around various milestones in order to, basically get a much better understanding of what's going to, be in the pipeline. So this market has been up for a little bit, and we've only had 2 traders trade, but they've moved the odds significantly. So in order to move the odds to the 75% no, cumulatively 1,500 DAI has been staked on this market. And I think it's important just to give you a little bit of background on, like, how these work. So I'm sure you're quite interested, like, how does the pricing work, for example? So first things first, these markets use something called an LMSR market maker. It was a concept invented by this guy called Robin Hanson. And essentially what it does is, through trading activity, it gives you probabilistic odds. How this market maker works is it will offer prices depending on what is the current odds. So this is something that Alan made, which is a really cool way of visualizing how the market maker works. So currently we've got 50-50 odds, and then you can see it's this pretty much a U shape in terms of the price the market maker will ask for every additional outcome token. And if someone executes this trade, it will move the odds. So if I did a big trade and move the odds to like 70%, 83%, you'll see that the closer an event gets to certain, the more expensive an outcome is to purchase. And if it gets all the way to 99%, it just basically becomes this flat wall where you're paying like 1-to-1. And what this means is, our markets are funded with 1,000 DAI initially. It's part of like the constraints around the beta, but essentially means to move market odds from 50% to like 99, 98%, that can cost, or someone would have to stake about 1,000 or 13,000 DAI. So already these markets, even though it's in beta, we've seen quite significant amount of volumes traded. I believe we're on 90,000 at the moment. So that's the market maker behind this. And again, it's still
how many unique users was that volume between?
Not a ton. So because I wanted to say this for the end, but we do have KYC, and that's been a significant amount of like friction. But what we've found is that there's a small group of users, and they will do research, and then based on the research, they will basically go big. And the more certain they become, the more money they will put on, because they want to get their piece of that funding. In this case, they want to get their piece of that 1,000 DAI. So in this case, I mean, you can see here, this has only had 2 users trade on it. The first user moved the odds from, let me just get rid of that so I can see so the first user traded and moved the odds from like, yeah, 51% to 65%, no. And then another trader came along and doubled up and moved the odds to 75%. So yeah, that was two separate traders. But essentially, yeah, if I want to make a trade on this market, I think, you know what, I'm going to go with the consensus here. And from maybe as a base rate, what's been happening with the shipping of Ethereum to milestones, I don't think it's likely. And then I think, okay, how much DAI do I want to put on this? Do I want to put at stake? So if I say 100 DAI, it gives me a, let's go with 1,000, let's go big. So what it does is it simulates like, hey, if this trade goes through, this is what you're going to move the odds to. So basically saying by investing this amount of DAI or staking this amount of DAI, I believe the odds or the likelihood of this event not happening should be about 87%. And then it also shows me here, like basically how much I stand to win if I'm right. So if I'm putting in 1,000, I'm getting 1,219 out. I stand to win, yeah, 219. But, and this is important, I risk the entire $1,000. So these are the one kind of markets, and we've done a few with MakerDAO or MakerDAO topics. In fact, our most successful market was on the launch of multi-collateral DAI, and how much, what would be the DAI supply like 3 days after launch. And that was super successful because it really came down to the wire. Like the last hour of the market, it just kind of reached I think the limit was 10 million DAI by Thursday, the 24th of November. Yeah, so that was our most exciting one. Then we have this different kind of market called a scalar market. And these are more interesting because, well, to me anyway, these categorical ones are, you know, it's yes, no. It's a bit like a coin toss. They're really good for events, like project milestones, but scalar markets are really good for ranges. So we have this one, which is basically saying, you know, what do you think the price of Ethereum is going to be at the end of the month at 12 o'clock UTC in a range between 120 and 170? And, you know, I'm a bit optimistic. Things have been going well. So I'm going to put maybe 100 DAI behind long. And that means, okay, I forecast that it's going to resolve to $146. These are a bit different because they don't resolve at like a yes, no. This will resolve on a value anywhere between this range. So it can be a bit tricky to work out your return. So we built this handy calculator here.
Oh, hold on. So wait, long in this context means above the median of the range, right?
So long thinks you suspect it's going to go basically, yeah, above what it is currently, with a maximum of 170. If the market resolves outside of the bounds, it treats it as if it was at that high bound. Okay. A few people played around with scalar markets. Like the term scalar market was actually invented when like Org and Gnosis first came out. No one's been able to pull them off because trying to do this for an order book is a bit of a nightmare. And so we've taken a crack at it, trying to simplify the UX. And yeah, we've got this handy little calculator here, which basically tells you, for example, if I went through with this trade, put in 100 DAI long, and it resolved at 156 US dollars, yeah, I'd actually do quite well and make 39%. But yeah, if it resolved at 170 US dollars and above, I would make 93% of like what I put in. Vice versa, if it resolves like way short, $129, I'm going to lose 65% of like whatever I put in. Now, we started this with the ETH price just because it was, you know, a nifty number, but we can do this with all sorts of range values, like the stability fee, for example, DAI supply, even the number of like unique users, if you had access to that metric. So these are the two markets. The scalar market is new. We launched it this week, actually, on Monday.
So tell us a little bit about maybe like how the oracles work and how the verification of outcomes works on your platform.
Sure. So as I mentioned before, it was super beta. So right now, what we do is we do it manually. This isn't a trustless oracle. You very much have to trust Gnosis and Site. And we just send a transaction to the smart contract that gives it the resolution value. We would like to, and I believe where this needs to go is it needs to be completely decentralized in the sense that once you create a market, no one can tamper with the resolution. And I think I mean, what Maker has been doing with your on-chain data is a perfect resource, basically. In fact, I'd like to use it for the price oracle. Right now, we're just using Masari, but yeah.
Nice. So,
Uh, yeah.
so I know that we spoke a little bit like outside of the call, and you were telling me that what's interesting is that prediction markets tend to create very interested researchers, right?
Yeah.
And so,
So
like, I really want to get into like the concept of it a little bit because I feel that MakerDAO as an open source community led kind of protocol, uh, it's kind of hard because the community is small, it's concentrated, and it's filled with like these people that are very passionate about this highly technical, highly complex thing. And whenever a new person comes along, it's usually because they're investing their own money, or it or it's like purely like their intellectual curiosity that brings them. But I know that if you have a prediction market that's big and a lot of people are using it, there's going to be some subset of people there that are going to be doing their homework, so to speak.
yeah.
uh, and so yeah,
So
sorry, I,
yeah.
I gave a very thorough TLDR there.
No, I mean, this is actually why I wanted to present.
Yeah.
Yeah, giving an overview of what we have currently, but this is where we're looking at the moment and thinking about governance. So there's this concept called futarchy. It's, again, a concept by this Robin Hanson guy. And basically, he was frustrated that politicians would champion a bill or policy that they knew deep down was like harmful. But they wanted to get the support of their followers, and the consequences of that policy might not even, they might not be in office at that point. So this guy was basically like, hey, put your money where your mouth is. So if you, and this diagram kind of explains it, that you have a market, and this market one is like, what will the revenue be if we fire the CEO? And another one is like, what will the revenue be if we don't fire the CEO? And basically, if one of these prediction markets shows like, oh no, if we fire the CEO, revenue is going to be like way higher, then you fire the CEO, and then see like, yeah, does the revenue work out higher? Now, this hasn't really been done in practice in any organization that I know of. I mean, a few organizations in the early 2000s play around with it. Google, Best Buy, they would have internal prediction markets. So there'd be like the most successful ones were like, when are we going to launch this product? And that was so successful because the managers would often kind of, fib project timelines in order to get it accepted. But the employees would be like, I know exactly how long that's going to take. And that information came out of a prediction market. But no one's really done this where it's been like completely open and anyone can participate.
Yeah, because there's no user-friendly, like, simple way to do it.
Oh, not even user-friendly. It's executives normally hate it. And that's based on a comment by Robin Hanson. So he had a company trying to do this. And because it kind of showed up executives and yeah, like, put doubt in their project estimates, like estimates or forecasts, it made them look bad, basically. So they stopped doing it. There's a few, I think, niche small ones, but the bigger ones stopped.
I gotcha. Okay.
And what we were talking about earlier, and something that we noticed during the beta, is we had this idea that, okay, if someone knows about a topic, they'll make a trade. They'll think about it and forecast it. But we never anticipated that, we'd actually incentivize people to really research, like, what are the levers and the likelihoods of those levers going off or on that would affect this outcome. And we first noticed it in the MakerDAO market. So we had a market on the MakerDAO stability fee. And one of our traders, we saw he made a trade. And then immediately after the MakerDAO, I believe it was a governance call, he was like, oh, and he went and he put like 2,000 DAI on the position. And I asked him about it. He's like, yeah, I attended the call, and it was like really clear that the stability fee is going to stay based on like the information that I got from the call. I was like, wow, we incentivized this guy to attend a MakerDAO governance session. And I was like, that's interesting. Then we had another market on the Uniswap volumes, and a different trader, he actually found out that the way that Uniswap was reporting their volumes, there was a bug in it. And then we're like, wow, we incentivized this guy to like find out a bug in this, in the way that they display data. And then it really kind of sunk that, hey, people are incentivized to go do research and understand like all the mechanics around this.
They'll dig into the granular details. Yeah.
Yeah, like we had one on compound. So then our guys were like figuring out, okay, well, how much like supply do you need in order to move the compound supply rate for USD, and how likely is that? And so I've been thinking about that in the context of Maker, and I know there's like a lot of questions of like, if we do this, then like what will the result be? And there's a lot of debate. And there's a type of prediction market, these conditional markets, which is like the next feature that we have scheduled. And I kind of took this example and I put it into a conditional market just to kind of illustrate the concept. So
and this is the question of the DSR spread that Bit was asking in that slide.
I do have another slide which are about the DSR, but well, this is also about the DSR like rate. But I know from the other governance calls that you guys are interested in like the poll versus like the spread. But I think I don't know enough about that to kind of like format one of these.
It's all right. Regardless, like even if the poll goes through and things are changed, this would still be valid, totally valid. So right, will the DSR be lowered to 3% by January 31st?
Yeah. So imagine like putting this market out there and funding it with, I don't know, 10,000 or whatever amount of money necessary to really like incentivize serious attention. So yeah, will the DSR be lowered to 3% by January 1st? And let's say that there's a proposal on the plate to lower the DSR rate. Now, if you think like, yeah, what will happen if that goes through? And then we've got the scalar market asking, yeah, what is the DAI supply going to be on a range from 100 million to 50 million? Okay, my bad. It reads 100,000 here and 50,000 DAI. That should be 100 million and 50 million. But yeah, then the trader can basically say like, if this policy is enacted, then I think then I think we're going to get way more DAI, and I think I'm willing to invest 80. Okay, yeah, so it'll be 4.5. So essentially, the UI is saying I'm going to buy outcome shares, outcome tokens, 1.45. That's going to cost me 4.5 DAI. And if this resolves to what's that, 89,000, then I stand to make 1.32%. But the whole concept here is basically putting your money where your mouth is. That if this thing goes through, you think this is going to be the result, and you're putting money on that. So it elicits this like really serious attention from traders. But vice versa, if the policy for whatever reason doesn't go through, so if you had to click on no and then make a prediction on like what would the rate be if no happened, and then no doesn't happen, the trader gets a full refund. So it's like if the policy isn't enacted, like no harm, no foul, you can get your money back. And yeah, we think this is a really interesting mechanic to incentivize attention and research around, if this, then that questions.
Yeah, will X collateral be added into the Maker protocol by like 2 years from now? And then, all of a sudden you have people digging into the smart contract code of like this random ERC20. Might be a shitcoin, might be a gold mine. Like you never know. Right?
And it could be, I mean, there was another, I don't know if the sound will work, but this was an original demo that we did, and Martin made a video of it, also looking at the MakerDAO ecosystem.
Sorry, I want to interrupt a little bit, just to mention that the numbers you saw back there, they're not necessarily accurate, but the concept is totally fine.
Right on.
Yeah, sorry.
Yeah, that's a clickable prototype that we didn't really pay that much attention to the numbers. Yeah, this probably isn't the best example, but I can share the tweet. So this is like 3 different markets, and people can combine if these different events happen in the specific order, what the result will be.
So I have two main questions. So one, if you're creating a market and you're loading up the market on both sides, let's say you put 10 grand into a market and you split it between no and yes, where effectively you're hedged out and you're just the market maker, right? You're attracting people to enter into this market. What is like the upside? Like what's the financial sort of like
Yeah, so I guess
context for that?
yeah, the business model around the current market maker, this LSMR market maker, is essentially whoever funds the market maker, you're essentially paying for the information that the market is going to provide. So that's like, you can almost think about it as almost a type of advertising, in the sense that you are paying for attention.
Can you start a market unbalanced? Like let's say I start a market with like just 10,000 on yes and zero on no.
Currently, we've got a bit of a manual hack around that, which is we deploy the market and then we just like buy the one side.
Change around.
Yeah, there's another project that Gnosis is funding called Omen.eth, which should release hopefully next month, which uses like the Uniswap model to fund markets.
Mm-hmm.
And that's got an interesting property to it in the sense that you can like just keep on funding the market. So if it's an interesting question and people are interested in the data, you can keep on putting money into it to attract more attention. And that one you can also set the odds at the time of market creation.
Right. And then my other question was, what do you see as the primary differences between this platform and Augur?
Sure. I mean, so the main thing is the different kinds of market makers. And I think as an approach, the nice thing about Augur and Augur's like tagline is unlimited betting or no limit betting, which is pretty cool. I mean, yeah, if you live in the UK, you can pretty much bet on anything, so that's not an issue. But in some places, you can't. The value proposition of Gnosis and Side is to help organizations make the best decisions possible. And this is a tool in which we believe we can really incentivize serious attention and serious thinking around topics, and doing it in a way that is appropriate for basically online groups.
So to summarize, it's the market making methodology. It's the decentralization versus centralization. So they have no sort of limits on the types of prediction markets they could do. And what was the other one that you mentioned? Did you mention another one?
I think just generally in the concept, we're looking for these tools to be like forecasting tools.
Right.
So that's where we see this this market mechanism and this technology, helping organizations forecast the consequences of decisions, not necessarily for just like straight up betting.
So in your view, like if an organization or even like a decentralized protocol like MakerDAO, for instance, wants a particular, let's say, collateral researched really deeply by people like that go beyond the scope of their current community, they can vote to say put aside 10,000 or 20,000 DAI of system revenue or whatever it is, and they could use that to fund a market and then produce this kind of work that they're hoping to produce as a result. And so like that's just like one example, right? And so is Signal, but can't you do the same thing with Augur? I mean, can't you do the same thing with any prediction market if you're able to make a market on it as an organization?
So with an order book, you do get an issue with liquidity.
Yeah,
that does become an issue, especially if you try to get people like going in the extreme. And it's not always easy to find like a match. That's really what it comes down to, is like the market maker is optimized to create these odds.
So it's literally just a matter, well, because liquidity translates directly into like usability and user experience, right?
Correct.
Yeah. Okay.
Yeah, it's just
so I'm a noob, so I'm trying to wrap my head around all this stuff,
No, sure. I mean, I guess theoretically, if you created a LMSR market maker bot on top of Augur that would like kind of facilitate trades on the order book, Yeah, no, theoretically you could do that. These conditional markets, though, that you can't do on Augur. For one thing, it's super expensive because every time you mint what's called like an outcome position, it's a ERC20, so that's like super gas intensive. What we've done with this conditional markets is we created a new framework called Conditional Token Standard or framework. But the main thing is that's based on the ERC 1155 standard, and it's just way more gas efficient. In fact, are you familiar? I'm sure everyone's familiar with Aragon.
Yes.
They have so they've commissioned a company to create a Futaki DApp, and basically it asks a question like, if this proposal, so Aragon has those AGPs, Aragon governance proposals. If this proposal is accepted, then what is the effect going to be on the price of Ant? But they use our old contract framework, and it just means that if you want to try trade a position, it can cost up to like $13 in gas.
Oh wow.
Yep.
That's heavy.
Yeah. So essentially, it's what we've been working on.
Efficiency, it's liquidity, it's and it's also the ability to have these. I don't know if on Augur you're able to have like range based outcomes.
You can do scalar markets, but the UX with scalar markets on an order book is a small nightmare.
Gotcha.
Yeah, it's very difficult to like. I think yeah, people pretty much abandoned it or doing it on an order book anyway.
Nice.
There's another company called Market Protocol, which is also doing these range kind of markets.
Yeah, I heard about them as well. Yeah.
Yeah, so that's the exact same thing. It's scalar markets.
Cool.
Yeah.
All right, so it's 35 minutes into the call. If anybody watching wants to throw in like a last question or two, I'm happy to extend it for like the next 5-6 minutes, and then we could go through the agenda for what's been going on this week at Maker. Not too much has been going on, so we could spend a few minutes if you guys have any questions that you want to ask Graeme while he's here. And also technical questions can also be answered, right? Because I know
Yeah.
said
Alan's online.
Alan Liu from your team is here, right?
Yeah.
Yeah, cool. All right, I'm gonna give it like a minute. If there's no questions, I'm gonna move forward and get into what's been going on with governance.
I mean, I do have a question for you, which is, at what stage of governance do you see this like occurring? Like, would this be something whereby if the MKR holders like vote on a poll, let's say to increase the stability fee, will be a prediction market to kind of forecast the effect of that, to kind of the effect of that stability fee being enacted or not? Or do you see it like a level below in terms of trying to signal from the community I guess perhaps a good proposal because it's been forecasted that the results of that proposal will be like super successful?
So my view is that it's probably going to be two different buckets of people making markets, right? There's going to be speculators that are just going to want like, okay, like let's make prediction markets on like system metrics like DAI supply, stability fees, et cetera, et cetera. But then like from maker governor's perspective, like we would use prediction markets as a tool possibly when a few things are a lot more established. So hold on. I was just hearing double. Okay, cool. Yeah, so two things have to be established. Number one is the mechanism for governance to pay for overhead. So like right now, as the foundation is bootstrapping the protocol, the foundation is paying for various things, right? The only thing that the Maker protocol is self-sustainably paying for is like the DSR. But eventually, it'll have to pay for, Oracle teams, for the governance facilitator to be compensated for, for several expenses, and they could also be like growth related expenses or research expenses, or instead of maybe hiring a researcher, they would use a prediction market to kind of incentivize a group of people to do research. So I'd say like the prerequisite for for something like this to be practically used would have to be the Maker protocol growing and in their actual ability to delegate funds and make decisions about how they use system funds for special things like that. And then, yeah, I guess that's pretty much my answer to the question.
Cool, thanks.
Yeah. Akiva's asking, can scalar tokens be used as collateral for a vault? I mean, technically.
Yeah, probably not a good idea just because they expire.
They're short term, right? Yeah. Yeah.
Well, it depends. I mean, you can create a market that will resolve like many years in the future. But it's and its value will fluctuate depending on like the
Yeah.
type of market. Yeah, but technically, yeah, based on Alan's response.
Yeah, technically speaking, but I think the process of onboarding the scalar token as a collateral and getting it in, like, it just doesn't practically make sense. Any tokens that really expire, it's like it's hard to justify the governance overhead of like having those, you know, and it's really like could be like a month long plus process to do the full research on the token and to build an adapter for it and to vote it in, all of that stuff.
Yeah, based on the comment from Brian, so we have been investigating, like, I guess
And
another.
hold on, let me actually read out the comment from Brian, because for the people watching on YouTube or something after.
Sure.
So Brian wrote, you could incentivize research and short the outcome in case they fail. Sweat smile.
So, yeah, we've been looking actually at so yeah, for the scalar market that I demoed earlier, basically doing stuff like either on like the lending rate, so if it's the DSR rate or compound supply rate, something like that. And the idea would be is almost to like create a safe yield, if that makes sense.
Like you can use it to hedge.
Yeah. So yeah, that could be a potential use case. Right
on. Cool. All right. Well, Graeme, thank you so much for coming on, and Alan, thanks for being on the sidelines, ready to answer technical questions. It was a real pleasure having you guys here, and I'm excited to see what your platform is going to grow into in the coming years.
Yeah, and likewise, if it wasn't for MakerDAO, we wouldn't have a decentralized stablecoin to run these markets, and that's been a crucial part of the puzzle.
Ooh, love die. But yeah, cool. Right on. So for the next portion of the call, we're gonna be going through the agenda that I prepared. You guys could click on the link in the chat. If you're watching on YouTube or listening on SoundCloud or something, you can go into the description and there should be a link there to 2020 agenda. Oh, let me mute you, Graeme. All right, you're muted. All right, yeah. So there should be a link to the agenda, so you could like look up by date. Today's January 14th. So everything I talk about, there's like links to the proposals. There's links to the threads. There's links to everything. So definitely check it out if you're curious. So launching into the governance bit, and I think I'm actually. Should I share my screen? Yeah, you know what? I'm gonna share my one of my screens and ignore my quadrillion tabs. I hear that that's normal. All right, cool. So here, share. Let me know if you guys see my screen. Just somebody make a noise. Do you guys see my screen?
Yes.
Okay, right on. Cool. So, all right, TLDR of what happened this week. So, on January 8th, an executive proposal was executed. It went through, and several rate changes happened. So, as many of you noticed, the DSR changed from 4% to 6%. The MCD stability fees, both on ETH and BAT vaults, changed also from 4% to 6%. And so it's carrying a sort of a zero spread somewhat. And then for the single collateral DAI ETH vault, or CDP actually, the stability fee went up to 5%. So we maintained that 1% negative spread between the single collateral DAI stability fee and the multi-collateral DAI DSR. And it's unclear whether that actually had much effect on like market maker behavior. Like the whole point of our reasoning, or not our reasoning, but governance's reasoning, and like what we came to conclude in the forum is that if there's like a small spread, it'll kind of pad the risk that market makers take in being the last ones to hold Psi and to provide that liquidity for like more retail users or like any regular user that's trying to migrate and get a hold of Psi. And actually, before I move on to the current polls, it's important. I want to point out that right now, there's 2.6 million DAI in the migration contract, which Primosh actually posted on Twitter that all but 2 CDPs, the 2 top CDPs, can comfortably migrate with the click of a button right now. So if you are a large single collateral DAI CDP holder, now is a pretty good time to do the migration if you've been putting it off for a while. And yeah, just wanted to point that out real quick. So it looks like we're in a really healthy spot. The system is, we're sitting at an all-time high for DAI and multi-collateral DAI, and I think the total amount of Psi is sitting pretty steady at 35. But we are seeing like all-time high combined DAI and Psi, which is really cool. So it's a little bit of a snapshot, but moving forward, there's an executive vote that is out right now. It started on January 9th. And the executive vote is to keep the Psi stability fee at 5%, but to lower the DSR back from 6% back to 4%, and then to lower the DAI stability fees on both ETH and BAT from 6% to 4%. So basically taking a step back from the recent thing that the recent executive proposal that we passed just before it, and it doesn't look like it is going to pass. And I think a lot of people in the chat, there's kind of a lot of there's not a lot of I guess what's the word I'm looking for, agreement about it, because yeah, just a lot of people disagree, and yeah, so I don't know. I don't think it's gonna pass. But anyway, that's enough of my personal commentary on it. But regardless, that's what's out right now, and you can expect a new executive vote to be out this coming Friday, the 17th, if this doesn't pass. So to inform that executive vote that's going to be happening on the 17th, there's a number of polls that are actually happening right now. So the polls are the usual weekly polls that are related to the monetary policy of Psi and DAI. The first one is the Psi stability fee adjustment. There's a range from 2 to 10%, and it runs for 3 days. It's going to finish midday on Thursday, approximately. And then likewise, there's a governance poll for the DAI stability fees on both ETH and BAT vaults. There's a DSR adjustment poll as usual. And if you guys want a quick breakdown, actually this is going to take a while to load, but from my understanding, I think actually the current rates are winning. But I honestly only checked about a day and a half or 2 days ago when I did my votes. So yeah, you know what? I think I'm gonna, before the call in the future, I'm gonna have like the current winning poll as another bullet point here. So I'm gonna note that option. Yeah. Okay. Cool. Right on. So, and then there's one governance poll that is not part of the ordinary cadence of governance. It's actually related to a community member brought improvement to one of our processes. So we, like, the way we poll right now, we're polling like for like absolute numbers, right? So well, this is actually haha, actually clicked on the wrong poll before. Sorry about that. Yeah, so the other polls we ask for like raw numbers, right? But this is going to be changing things a little bit. So it's asking, should we replace the weekly DSR rate governance poll with a DSR spread governance poll? And what this does is it actually shifts Maker voters' perspective from being manual, like numbers, to being able to make this decision based more on a business perspective. So it basically would go like this. Next week, instead of a DSR adjustment, it'll say, what should the spread be? And if it's 0, then it's going to keep a 0 spread as it is right now, right? 6% stability fees, same DSR. If the spread is 1, for example, 1%, then these stability fees at 6% would mean that the DAI savings rate would be 5%. And then likewise, if we decide to, let's say, run a negative spread, we would be running 6% stability fees on a 7% DSR, for example. So so basically, we're just having a poll on whether we want to reframe the question of how we manage the DSR. And the advantage of this is that we'll still be able to use the DSR for monetary policy. But at the same time, we'll have it'll be following the sort of real uh, stability fees that are being assigned to eventually like individual vaults. Like right now, ETH and BAT are the same stability fee, just for simplicity's sake, and for this current season of like the migration. But eventually, these are going to be uh, more thoroughly risk assessed, and they're going to be assigned a way more clear rate in regards to like what the risk premium is of the vault itself, and then uh, the additional built on like the additional small bit of interest that goes towards funding the DSR. Uh, yeah, so hope that wasn't too much of a word soup. But anyway, yeah, if you're interested in voting to reframe the question of how we vote for DSR, definitely participate in the poll. And if you're curious about the discussion around that, you can go to Governance at a Glance. It's a thread in our governance forum that's upkept by the community. One guy in particular, Mr. LF Dubs, long for wisdom. And you could get into a couple of different threads. A governance model for Maker is kind of like the broader picture uh, for like why we're doing this poll, and also how we might be reframing other things that we're going to be polling for. Uh, so yeah, check out those threads, give them a read, and actually I think we're going to try to get better like summaries and synopsises and kind of yeah, we're gonna try to get more yeah better explanations of how these of what these things are and the conversations that are being had, because there's a lot, and sometimes they get a little hairy and complex, so it's not always so easy to follow if you're an MKR holder. Yeah, so I think that's one of the big things that some of our community is focusing on this year, is to get better information in the hands of like casual MKR holders that vote. All right, cool. So that's about it for governance. Also, if you're interested in watching the Thursday risk and governance call, but you don't have an hour and a half of your day or of your week, you can very kind of easily go and check out the summaries that are posted about the call. They have tons of like video anchors. Uh, Everything is bullet pointed out, so you can actually even just pick and choose what like you find interesting in the call, and you could skip ahead there and use the summary to your advantage, to save you time, to yeah, to basically be a tool in your pocket as a person that's either educating themselves about how we do risk and governance and like what the current events around risk and governance are, uh, and yeah, and just to inform yourself as a MKR holder. So those are posted usually by Monday. The call happens on Thursday, so there's it usually happens after the weekend that the summary is posted. Cool. And then likewise, Governance at a Glance, just an amazing resource if you want us like a snapshot of all the conversations that are happening right now. All right, moving forward. And also feel free to interrupt me. Yeah, happy to like answer questions or expand. There's also, I think, a few Foundation people in this call. So if you guys have even like technical questions, definitely feel free to jump in, and I could try to persuade one of the Foundation members to answer. All right, so moving forward, partnerships, integrations, grants. We saw just a couple. Delta Crypto Portfolio Tracker added DAI. Hola X supports the DAI token in vaults. I'll leave it to you guys to click those links and like do your own research. I don't know if they're trustworthy apps or anything like that. I just saw that they integrated with us at some level. All right, so from the foundation, we actually have a few things. So we introduced a new ecosystem landing page, and I find this really, really cool because a lot of people that I try to introduce DAI to are like, like great DAI, like I can, put it in savings, DSR, yes, but like what else can I do with it? And so there's a ton of apps here that we kind of divided into get DAI, use DAI, hold DAI, accept DAI. There's DeFi apps for like trading and stuff. Play with DAI, all the games and stuff. So we're actively trying to aggregate kind of like all of the interesting places that a DAI user can use their DAI. So we have a new ecosystem page. So excited about that and excited to see it grow. Also, from the foundation, Stephen Becker was listed as one of the board members for the OECD Blockchain Expert Board. So the OECD stands for the Organization of Economic Cooperation and Development, and they are part of like this. I think it's like a nonprofit, but they try to inform, consult regulators, and basically be groups of people that are lobbying for the interests of the industry, and doing so in like a professional, responsible way, whatnot. I might be butchering that. There's probably a lot more to it, but regardless, Stephen Becker, who's our COO and president of the foundation, is one of the people on that board, and that's really exciting from just from a general like where we are in the world uh, standpoint. Yeah, cool. So highlights from the community. This is probably my favorite one. MKR in the burner was burned, and we actually have the man himself who burned it in the call, if I'm not mistaken, Mr. Mariano Conti. Uh, but
I did not burn it.
you didn't? No. Okay, I thought you did.
No, but I know who did.
Uh, you devil, you tricked me. Well, either way, there's no longer 1 million MKR officially. Now there's 989,000. So yeah, so Maker got burned, and so actually, Mariana, if you want, can you give like maybe like a 2 minute uh explanation of what enabled this? Because we weren't you weren't able
Yeah.
to burn MKR previously, but only recently that capability was enabled.
Yeah, sure. So there was a blog post, I think December 20th. So this is part of something. The MKR token has an owner and an authority, and for the past 2.5, 3 years, the owner is the multisig for the Maker Foundation. The idea was always to give that ownership away. Like the multisig hasn't done anything with that, but it was the only one that's allowed to mint and burn the tokens, right? So one of the things we did, so the multisig voted to add a contract called the MKR Authority, and that it does a few things. First, it allows governance to also have access to those functions, and that meant that we also finally got access to the burn function. So all the MKR that was paid for stability fees in single collateral DAI for the past 2 years, that was already in the burner contract. So it was effectively burned, but
Yeah,
it didn't show up in the supply. Like number still said 1 million.
there's something special about that number going down, though.
Yeah. It was a pretty big moment.
Yeah.
And
If you guys are interested in
and that
reading
also
about it,
enabled, yep.
I'm posting the blog post just to supplement your explanation.
Exactly. And that blog post came out, and then we all went on holiday. That's why it didn't happen before. But yeah, it happened finally. So it's a big milestone.
Do you know if the authority transfer, if the transaction is anywhere? I want to add it to the milestones list on Awesome MakerDAO at some point.
Yeah, I'll send it. In fact, there were 2 transactions. We deployed an authority that did everything perfectly for multi-collateral DAI, but we had forgotten about single collateral DAI. So we deployed a second one. Otherwise, we wouldn't have been able to burn that MKR in the burner. So yeah, we'll give you that transaction. It's pretty significant.
Brian wrote, total supply go down. Yeah, right on. Cool. So yeah, Maker in the burner was burned, and that is I don't know. I've been waiting for that for a long time. I've been looking at that burner. I remember it took so long to get to 100, and then once we got to 100 MKR, it was like you blinked and it was like at 1,000, and you're like, oh, it's like, damn, that was quick. And then like you blink again, and it's like, oh, 5,000. And now all of a sudden it's January, and it's like, oh, there's 10,000 MKR. It's like 1% of MKR has been burned from single collateral DAI, which I just love it. It's great. And also we're slowly approaching the point in the multi-collateral DAI system where we're able to start having the MKR auctions. So once this system surplus number hits 500K, every time it hits 510K, a 10,000 DAI auction for MKR will occur, and that MKR will effectively be burned right away. And so in MCD, it doesn't go to the burner address, right? It gets burned directly. Am I right about that, Mariano?
So for the one who wins the auction, yes. So it's still a surplus auction. But yeah, in the end, the winner pays bids for MKR with DAI.
Yeah, so
Sorry,
they get
the other way around.
They get the 10K DAI and they send the MKR, but the MKR doesn't get sent to a burner wallet. It actually gets burned right then and there, right?
Yeah.
Yeah, cool. Okay. Right on. Nice. All right, yeah. So moving forward, we also saw Axie Infinity that just launched their, I think their beta. They're doing this thing called the Infinity Cup. They have a 2,100 DAI prize pool, and I think they have a prize pool of some other crypto too there. But Axie Infinity is one of my favorite games in the crypto space in terms of like the design. Like I really love the aesthetic of it, but I honestly haven't played it yet. But either way, exciting if you're into gaming and blockchain. Didn't have anything for developer creations. Send me stuff if I missed anything, by the way. I'd love to mention things next week if I missed anything this week. There was a couple of articles that I wanted to highlight. So MakerDAO pitches DeFi to the masses at CES 2020. So a bunch of our team was in Vegas just last week. And we were the only digital money in the digital money section of CES, which is pretty cool. And so yeah, I think as we're trying to kind of expand outside of the crypto bubble, right? And I think this was a pretty cool like little first step to getting people outside of crypto to consider crypto as like a tool that they could use, because in reality, if you can abstract away the fact that it's crypto, and if you could build in something like the DSR into a consumer DApp, even something like Venmo, like that's something that could really be powerful, and so being able to bring the fact that this thing even exists to a place like CES 2020 was cool for me to see. We also saw DeFi Pulse come out with a nice beginning of the year article about the 3 DeFi dApps that are starting off strong, Maker being one of them. Notable threads. Okay, so this actually I saw right before the call, and Derek Fossman, awesome dude, posted it. So I know a lot of people in the governance community were a little antsy about all of the different things that have to be considered for the global settlement of single collateral DAI. There's actually a couple of like signal request threads for how people want to go about it, whether single collateral DAI has to reach a certain uh, size supply before we like put a date on the emergency shutdown or global settlement, or whether we should just put a date on it, right? And disregard supply and just expect if you put like a date 3 months ahead that people would be pushed more to migrate, and so that that system could be shut down and deprecated. But Derek did a really great thread on our forum to put together kind of all of the conversations that have been happening around this. And he did it in a super structured, like awesome way. I highly suggest you guys read through it, because one of the main things that's going to be happening through Maker governance is the global settlement of SCD. And whether that happens in 2 months, which is possible, or 6 months or 8 months. All depends on basically what the conversation is, what the sentiment in the community is, and ultimately like the analyses of who like the remaining SI holders are and borrowers are. And actually, if you rewatch the Thursday governance and risk call, Primoz did an excellent job of doing some analysis on that. So check that out. All right, and we're already 3 minutes over, so I'm gonna start wrapping it up. Videos, episode 68 of the governance and risk call, and then we just have a few events this week. We have one in Madrid on the 22nd, one in Tokyo on the 22nd, and one in Davos in Copenhagen on the 23rd. And so I think, yeah, they're all basic meetups. I think the third one, Rune is joining a DeFi panel at the one-day summit organized by CVVC and Mama. So that's pretty cool. And yeah, and another thing that I wanted to do if we had time, but I think I'm gonna start doing just as a bit to kind of make this community call a little bit more interesting and maybe a little bit more educational for you guys that are trying to learn about the system. But at the end of the call, I'm gonna do something called the system segment of the week. And if you guys don't know about docs.makerdao.com, it actually gets into all of the lovely details of the Maker protocol. And so I think every week I want to try to take maybe one smart contract, one piece of this like really cool system, and to talk about it and to just give a little bit of like a brief overview of what it does, and what its connection is to like other parts of the system. So yeah, I was gonna do that today, which is like, yeah, that middle big whole thing. But I'm gonna skip it because we're 5 minutes over. And I will do it next week if we have time. So yeah, thank you guys for coming on the call, and have a great Tuesday. See you guys next week.